What's up, guys? My tier recap back at it again with another video, and man, oh man, oh man, if you haven't lost your mind in this market, I salute you. But this is one of the greatest reversals of all time, and this was bound to happen. You know, many people were told that they were idiots for trying to expect another crash happening after 2020, but you know, this is just the law of progression. You know, we can look back in history. We had our first minor dip, February, and people thought, oh, we're past that in September, and then December hit, and then people were probably panicking, and same thing's repeating here. We have March, we have a dip, we go up more, and we have another dip, and people are panicking. And if we go look on the daily RSI, this is on a daily RSI level on the 30-day frame, so this is not 14 days. If you were to go to 14 days, which gives even more confirmation bias, if you're looking for that, you can see that we're even more oversold. We go from 39 to 33. The stock RSI is low. It's creating a different pattern than currently what's going on with SPY. If we take a look on here, the SPY actually was indicating a bullish reversal here. We were going down in price, but our RSI was showing that we were starting to ramp up some of the buying speed. And what ended up happening is we got completely faked out. I mean, people thought that maybe we had relieved ourselves at 430, and we just said nope, not happening. And so what we previous did is we looked at this trend that we could also see happening on Hex, where these supports are just going lower and lower and lower. And these trend lines, they may not mean a lot to the specific date, but you get the picture. We are not going up and to the right, we are going down and to the right, and that's very backwards for anybody. If you look at this nifty return here, if you would have invested $10,000 at the end of last year, which is December 31st 2021, to now almost 6 months into this year, you'd be down over $1,200. Right? That is a lot of money to lose. That is over 12% of your net capital that you invested into the market. And that is just, your annualized gain is 38% negative. Right now we're at 411 is showing, but really we're at 398. So you're feeling the pain. If you go look at TradingView and you go from the top to the bottom here, we're down 17%, which, if you're holding leaps, your leaps are crushed. Like they at least got, a haircut of at least 50%. So this is a perfect time if you've been holding cash. If you haven't been in any of the equity markets right now, you're unscathed. Yes, cash may be terrible, inflation may be terrible, but you're liquid. If you, this sounds terrible, but if you live paycheck to paycheck and you have liquid money that wasn't necessarily tied up in the stock market, now when everything's on a fire sale is the perfect time to get in. If you have a longer time horizon and don't worry and fret so much about price, so you think, okay, I'm going to get in at 400 and I'm going to sell at 410 or 425 and take profit when I can. If you just think, okay, well, I think reasonable price is 400, maybe 405, I'll go high as 4010. And until we see those levels or we go above those levels, reevaluate my trading strategy. But for right now, personally, what anybody could do is open their Roth IRA account and simply just allocate 10% of the money they invest into the account to be put into VU, VTI, SPY, QQQ. You could be put it into ETFs, which I wouldn't necessarily recommend. ETFs, you go look at ARK, and ARK has just been absolutely battered. And, you can only defend that for so long. And so if we go look at the time frames, like the 4 hour, we can see that we're just red after red after red. There's just no buying volume, with just none of it. And so if we look on the indicators, the stock RSI is indicating that the end is kind of near here. We could see another bounce and then go down a little bit further. If we go look to the left, is a great indicator of previous supports that should, in theory, hold up. Our fall safe obviously is 384, and absolutely the floor, which I doubt we could see. I think there would be a lot of pandemonium if we saw 371. And I'm not shooting these just out of anywhere. These are just straight up from, if you look over to the left, which is the best indicator because this is the past. And sometimes we can use the past to predict future performance, or at least give us an idea of what could happen in the future. So if we look at these horizontal support lines, we can see that we're touching the crisp of the peak in March of 2021, which was about a year ago and 3 months. But now, we are testing it as a support, and so we're not falling through like we did from the from the 18th to the 25th. We're not having that kind of plummet. We saw a pretty micro dip of 3%, which I probably think we're all wishing and begging to have right now. But this is the time where people make the most amount of money. And, so every day that you saw a SPY go up $10, if you ever saw it go up $15, you probably felt insane FOMO. But analyze yourself and your emotions. Why do you feel so fearful but feel so greedy when a stock goes up? If you can if you can flip those and reverse engineer it and use it to your advantage, if you get greedy when a stock goes down and get fearful when a stock goes up, you can caution yourself. You may not necessarily make the best trades when it's going up, but if you buy a stock when it's going down, if the fundamentals are clear cut like we're trying to advise everyone to do, then you will get it nail on the hammer, because you're buying when everyone else is fearful. You're not buying at a premium. You're not buying at a retail premium. The institutions, if Morgan Stanley comes out tomorrow and says they downgrade AMD, am I going to sell AMD? No, because I would rather bet my money and the people around me who play video games every single day, people who use video editing software, on them preferring AMD chips over Intel chips than somebody who has only a license and is rating this in just a one-off. This isn't their life's work. This isn't everything. They don't use AMD products. They only know AMD as a balance sheet. They've never even held a CPU. If you were to tell an executive, please put a CPU in and put the thermal paste on and the CPU cooler on, could you do that for me? If you were to give them an AMD chip and an Intel chip next to each other without any markings, they wouldn't know what the difference is. They could probably play on the AMD one and say, wow, this is so much better than the Intel one, and because they don't know which brand it is, they would pick the AMD one. So it is all a facade. Buy what you believe in. And so what you could possibly look at, and this is just watchlist advice, is SPY is oversold. SPY is like the boomers' favorite stock. They have all the retirement money in this. This is the market. This is the U.S. economy, okay? And Jerome Powell, for all the discredit he gets, is money on the ball, okay? I will not write off the printing he did, but, he had to keep up the market, and he had to keep up the economy, and he did both of those, and it's time for us to cool off just a tad bit, but not to get just run for the hills. We look at the weekly, we're hitting some pretty good levels here. If we're hitting March 2020 levels, and what that means is you get in now. This is when you get in. If you have the guts, and the grits and the iron, you could see a 21% increase in the S&P 500. If you hold 10 contracts, that's over 1,000 shares. So you could see over 1,000 times 84. Let's do some quick calculator math for you gentlemen. 84 times 1,000. $84,000 if you get if you get 10 contracts of S&P, and we go it up to the all-time high. So this is just watchlist advice, guys. This is when money is made. Money is lost, but ultimately money is made in the end. So please do not be fearful. Be smart. Be intelligent. Think about your trades. Don't trade with emotion. Trade with reason. Trade with logic. Trade with determination. And most of all, trade with education. Educate yourself every day. Seek out knowledge. Watch videos like ours. Read up on books. You could find stock market advice in day-to-day life, okay? Enjoy the grind. Enjoy the bad days, because the bad days are what make the good days even better. This has been Monetary Recap, guys. I hope you enjoyed the video. Make sure you like, comment, subscribe, and leave your comments in the subscription or in the comments box. And make sure you check out our Discord and a referral link. And this has been Jake, guys. I hope you enjoy it.